Hi everybody, in this video you will see how to do adjusting entries. Doing adjusting entries is the step 5 in the accounting cycle. Okay, before you do adjusting entries, you have to remember the purpose of doing adjusting entries. The main purpose of doing adjusting entries is to follow matching principle. Matching principle says when you want to calculate profit, you have to match the revenue for one accounting period with expenses of that accounting period. That is a short way to explain about matching principle. So if you want to calculate profit for year 2020, you have to match revenue for year 2020 and expenses for the year 2020 only. You cannot add revenue or expenses from year 2021 or year 2019 or other years. Okay, remember that. So to do the adjusting entries, we will use this sample question. Okay, in this question, the question shows the trial balance of Papa Laundry Enterprise at December 31st, 2000 X2. So this is a sole proprietorship service business, the simplest type of business. Okay, see this trial balance. Okay, in this trial balance there are many accounts: cash, laundry supplies, prepaid insurance, laundry equipment, accumulated depreciation for the laundry equipment, account payable, capital, drawing, revenue, wages expense, rent expense, utilities expense, and miscellaneous expense. There are debit balances and also credit balances. So the total in the debit equal to the total in the credit side, which is 250,000. Okay, in this question, there are 5 additional informations related to supplies, insurance premium, depreciation, wages accrued, and cash received from customer. And then the question, you are required to prepare adjusting entries for each additional information. So most of the time for this kind of question, you for every one additional information, you have to do one adjusting entry. Okay, let's see. A service business will have supplies. Supplies are items used by the business to provide services. The business uses the supplies when they providing the services. Okay, so now this information. Laundry supplies on hand on December 31st are 1,500. So you are required to do adjusting entry. So, okay, this is the way to do adjusting entry for supplies. Always remember this. So remember the purpose of doing adjusting entry? The purpose is to follow matching principles. You have to make sure revenue and expenses related to one accounting period is recorded in that accounting period, so that you can calculate an accurate profit for that accounting period. So for this supplies, you have to say supplies is an assets. One thing about supplies is when a business has supplies, the supplies are assets. But when the business uses the supplies becomes an expense. So in this, adjusting entry for supplies, the first thing that you have to do for adjusting entry for supplies is you have to calculate the supplies used in that accounting period. So the way to calculate the supplies used is like this. Supplies used. So here you see at the end of the year, the balance of supplies is 1,500. At the beginning of the year, the balance of supplies is 9,450. So how to calculate the supplies used? Supplies used is the beginning balance of supplies minus ending balance of supplies. Supplies used equal to the beginning balance of supplies 9450 so minus ending balance of supplies 1,500. So the supplies used during the year is equal to 7,950. So when you do the adjusting entry for supplies, first you have to calculate the supplies used, and then you record the supplies used in that accounting period. Okay, so the record is done, the adjusting entry is done at 31st of December 2000 X2. You record the supplies expense increase, you have to debit. So debit account supplies expense. The amount is 7,950, and credit account supplies 7,950. The adjusting entry for supplies is always like this. You record the supplies expense, so you debit the supplies expense account, and then you credit the account supplies asset by the same amount. Okay, let's see the next information. Okay, the second information that we can see here is the insurance premium expired during the year are 3,200. So in accounting, something about insurance that you have to know is like this. When a business purchases an insurance premium, the thing that happened is the business purchased the insurance premium today, and the business can use the insurance premium for the next 1 year. Most of the time, the insurance premium will cover 1 year. So when the business purchased the insurance, the business cannot record it as an expense because the business has not used the insurance yet, or the insurance has not been utilized yet. So when the business purchased the insurance premium, the business has to record it in the account prepaid insurance. So prepaid insurance is the amount that the account that a business uses to record the purchase of insurance premium. Prepaid insurance is an asset because the business purchased the insurance premium today, and the business can use the insurance or utilize the insurance for the next 1 year. So it is an asset. And then for the insurance, when the business purchased the insurance, it is an asset recorded in the prepaid insurance account. When the business utilized the insurance, it become an expense. Okay, so see here, when the business purchased the insurance, the business record it in the prepaid insurance account, and then at the end of the year, the data here says, the info here says, insurance premium expired during the year is 3,200. It means that the insurance that has been utilized or expired during the year is 3,200. So it means that for this information, you have to record this 3,200 as insurance expense. So how to do the adjusting entry? So the adjusting entry for number 2 is you record the insurance expense. So how to record the insurance expense? The date is 31st December 2000x2. The day you have to do the adjusting entry. So you record the insurance expense. Expense increases, you have to debit. So debit account insurance expense. The amount is $3,200. The thing that happened is, at the end of the year, this amount has become an expense. Your prepaid has decreased. When the business pay or purchase the insurance premium, the business pay 4,300. At the end of the year, some of the prepaid, some of the asset has been used or utilized or expired. So this amount has expired. So you record this amount as an expense. You reduce the prepaid insurance or the asset. So credit account prepaid insurance. The amount is 3,200. Okay, this is the way to record, to do adjusting entry for prepaid insurance. At the end of the year, you have to calculate how much from the prepaid has become an expense, and then you record the expense. Information number 3. Information number 3 is, this information is related to depreciation expense. Okay, adjusting entries for depreciation. You have to do adjusting entries for depreciation every year. Okay, you have to know how to do this, how to do the adjusting entry for depreciation. Okay, how to do this? See the information here. Depreciation expense for laundry equipment is calculated using straight line method. The useful life of the non-current asset is 10 years with no residual value. So to do the adjusted entry for depreciation, the first thing that you have to know is to calculate how much is the depreciation expense. Okay, there are many methods that can be used to calculate the depreciation expense. The typical one is the straight line method. So the way to calculate the depreciation expense using straight line method is like this. The cost of the asset minus residual value of the asset divided by the useful life of the asset. Useful life of the asset. Okay, in this sample question, the asset laundry equipment is equal to asset laundry equipment equal to 140,000. 142,000. The residual value is 0. The useful life in this question is 10 years. So how much is the depreciation expense for the current accounting year? This one divided by this one. So $14,200. So now you know the depreciation expense for this business. After that, you have to know how to do the adjusting entries. So the adjusting entries is like this. This is the date. Adjusting entries for depreciation expense is always same every year for every business. So you have to memorize the adjusting entry. So you have to debit the depreciation expense. In this question, it is 14,200. And credit accumulated depreciation for the asset. So accumulated depreciation for the laundry equipment. In this question, the asset is laundry equipment. So the amount is 14,200. Okay, now we see the information number 4. Information number 4 is wages accrued but not paid in December 31st are 750. So remember, the purpose of doing adjusting entries is to follow matching principles. You have to make sure that an expense related to one accounting period is recorded in that accounting period. So for this information number 4, wages accrued but not paid in December 31st. Wages accrued means that the workers has worked in the year 2000X2 and the business has to pay the workers, but the business has not paid yet. So in accounting, you record expenses when they happen. So for this wages accrued, you have to record the wages expense. So how to record the wages expense? So this is the adjusting entry for accrued wages. 31st of December, the date 2000X2, the date that the business has to do the adjusting entries. It happened, but not yet paid. So you record the expense. You debit wages expense because it had happened. So the amount is $750. But the business has not paid yet. So you cannot credit cash. But the business owe money to the workers. The business will pay later in the future. Maybe next year. So you have to record this item in a liability account. It is a liability because the business will have to pay something in the future, in the next year. So in accounting, we use account wages payable. Payable means the business will have to pay something. It is a liability account. So credit wages payable 750. And this is the information for information number 5. Cash received from a customer but not yet recorded for service to be provided in January 4, 2000X3. Okay, how to do adjusting entry for this information? So remember, you do the adjusting entry to mainly because you have to follow matching principle. So this cash is received by the business, but services will be provided in the next year. In accounting, you record revenue when the transaction happen, when the business provide a service to a customer. So in this information, the business cannot record the service yet because the service will be provided in the next year. So how to do the adjusted entry for this? So the adjusted entry is like this. The date is 31st of December 2000X2. You have to record the cash in because the business has received cash from the customer. So cash increase. So debit account, cash. The amount is $50. But you cannot record the $50 as a revenue because the business has not provided the service yet. So in accounting, you record in an account called unearned revenue. The amount is 50. Okay, remember this. Unearned revenue is an account that you use to record payment made by a customer for services that will be provided in the future. You cannot record it as a revenue yet because the service has not been provided yet. It is a liability account because today the business received the cash, but the business has to do something in the future for somebody. So it is a liability. Okay. I have provided a link where you can download this question with the answer. In the next video, you will see the way how to prepare an adjusted trial balance. Thank you very much.